Welcome, everyone. Give everyone just a few minutes to find their way in. I see we're getting a few more folks entering. Give another couple minutes here. All right. Well, as we are given just a couple more minutes for everyone to find their way in, I will get us started. Welcome everyone to this special live interview session. I'm Jana DeSanti. I'm brand manager for Rain Group, and I'll be your tech host today. We'll give everyone just a few more minutes to jump in. And while we're doing that, since this is a new format for us, I'll share a bit about what you can expect. First, some background. This June, Rain Group launched a new executive selling offering called the C-Suite Sales Accelerator. This 2-day high impact learning experience gives sales teams the rare chance to practice the unique skills needed to win buy-in from C-suite executives with immediate feedback from real world CxOs. Sellers who've taken part will tell you that hearing what works and what doesn't directly from C-level buyers is game changing. And that's what we're giving you a taste of here today. In this Boardroom Confession series, we ask CxO mentors from the accelerator for their candid insights shaped by decades in the C-suite buyer's seat, the good, the bad, and the ugly of sales pitches past. They'll share opinions and examples in response to 3 questions, and you, the audience, will have the opportunity to ask follow-up questions after each one. This is intel most sellers never get to hear, and we're excited to share it with you. Now that everyone's arrived, I'll hand it off to our host, Rain Group's own Chief Client Officer, Andy Springer. Andy?
Thank you, Jana. Thank you, everyone. I would say good afternoon, good evening, and good morning to our participants. Thank you for joining us. I don't know if you're more excited than I am, but I'm certainly excited for this one. Quick background on me for those who I haven't met. Andy Springer, Chief Client Officer. I am a practitioner who is in the field, often helping teams across the world lead sales transformations in order to improve their selling performance, but most importantly, unlocking the value that they can bring to their clients, customers, and buyers in all different industry types. And absolutely thrilled to be with you here today. Enterprise buying environments are more complex, and I know a lot of you would know that because you live it each and every day. Never been more financially scrutinized and stakeholder driven than ever before. A 2026 global analysis by Forrester found that a typical buying decision now includes 13 stakeholders. And for more complex sales, the average is even higher, and the stakeholders are more senior. At the same time, our latest research on the top challenges and priorities of sales organizations in 2026 found that 80% of sales leaders consider navigating complex buying groups a top challenge for their organization. And this rise in buying group complexity is a major problem for growth-focused organizations because many sellers struggle translating product expertise into the language of executive business value. So C-suite buyers expect sellers to lead sales conversations with highly relevant, unique, and strategic value grounded in a high-level understanding of the organization's financial position and deep expertise in their industry. Meanwhile, sellers often default to focusing on product first, especially ones who operate in complex and highly technical verticals. They don't just adjust their value proposition to align with executive priorities. so they fail to resonate. And with a busy executive, that is one chance that often will end up being the last one that they'll get. So together, these trends create huge risk for sales organizations. Sales organizations are seeing more senior buyers in buying committees. Selling to C-suite requires a different kind of conversation than selling lower down the org chart. And most sellers don't know how those conversations are supposed to go and get very few opportunities to practice them. So, what does it take for sellers to win support from C-suite buyers? And that is the big focus of our time together today in this new format, as Janice so wonderfully introduced. And to answer that question, allow me to introduce our guest of honor for this special live Q&A session, Al Petrillo. Al is a highly experienced C-suite executive who now shares his expertise as a CxO mentor and coach for our new immersive learning experience, the C-Suite Accelerator. Welcome to you, Al, and thank you very much for joining us. Before we jump in with our questions, would you like to give us a little bit of background about you?
Well, thank you, Randy. Thank you for inviting me here today. I really look forward to this discussion that we're going to have. My background is all finance. As many of you could tell by my accent, I'm born and bred in New York. I grew up in New York City, went to school there, my undergraduate work at Pace, my graduate work at Pace. Spent my entire life on Wall Street, started off in operations, only because I really wanted to understand how the trading world, how the finance world worked on the street. Worked my way up through the CFO position and then ultimately the CEO position at Jefferies for their global New York Stock Exchange trading broker-dealer. It's for me, I feel that if I have the opportunity to express how you could make your career better, how you could get in front of a C-level executive and make an impact, it's something that I feel worthwhile and worth my time. So I'm glad to be here today, Andy.
Thank you very much, Al. Let's kick things off. I want to get straight into our first question. And what I'm going to do is I'm actually going to just ask you the question, and then I'm going to switch us back to camera so we can watch you and then invite others to join in the Q&A if you have questions for Al as we go. So from your perspective as an executive buyer, why have buying decisions become more complex and more senior?
Well, it's a question of how the industry is changing. For me, the reason you get C-level executives more involved in the process, and I could see the change happening over the past 10 years of my career before I did, in fact, retire. But it became a question of capital allocation. So you're talking about budgets. Budgets become increasingly more important, particularly when you're dealing with shareholders. Also, it's a question of risk. The risk in today's environment is incredibly high. For me, risk translates into change. And what I mean by that is every time you introduce change into the organization, you introduce risk. And I'm going to talk a little bit more about this, but this is why many C-level executives shy away from change because of the risk factor. Also, the complexity of technology. I remember when I first started, when we implemented new forms of technology, enhancements, increases, updates, whatever it was very focused, very controllable. In today's world, what we're dealing with here in terms of transformational changes in the organization, they're at such scale and such complexity that in order to affect a true transformational change, it impacts every segment of the organization. And this is why when you talk about rewiring an organization, C-level executives have to be involved in the process. They know what's going on in the organization. They know if an idea is good, sound, will work, will have an impact. At the end of the day, it becomes a question of business value for every C-level executive. If you look at the roles of the C-level executives in today's world and why they're getting more involved with these decision processes, because they're tagged with creating value in the organization. A real quick story just for the CFO position itself. When I was at the CFO level, and I'm going to go back maybe 10 years, CFOs were tagged with being preservers of value in the organization. And what did that mean? That means looking backwards, looking at history, focusing on the financial statements, and telling virtually everybody within the organization as well as externally what happened last quarter, last month, last year. Well, CEOs finally woke up to the fact that, hey, I'm paying this individual millions of dollars. They cannot just be a preserver of value. They have to be a creator of value. So that CFO role position today is now involved with every aspect of the organization: technology, legal, operations, human resources. They have to be. The CFO is probably the only position that sees everything that goes on in the organization based on the financial numbers and what is happening. So now they have to create value as well. So I think these are some of the basic reasons why the C-level is getting more and more involved with all of these decisions that are going on.
So we've got risk, we've got the changing face of technology, we've got transformation, we've got CEOs in particular having to lean in more in order to define and create more value for their organizations as we go. The C-suite, we talked about CEOs, talked about CFOs. Great question here that I think is timely for this one. What is the current, from your perspective, what is the current average number of buyers that buyer influencers involved in an important purchasing process and decision-making process?
Well, I think you could, for me, again, depending on the size of it, if I'm looking for a large transformational change that's going to impact a lot of the different functional areas within the organization, you could probably count on at least the CFO, the CMO, the CIO, the COO. I would say on average, for a large transformational change, you're looking at 10 to 12 individuals that are going to be involved in that process.
And who is it? Did you see it? Was it a consensus mostly in terms of the decision making around those, large investment decisions, particularly around transformation? Was it, the committee recommends and the CEO has sort of carte blanche veto power? What was the sort of dynamic that you were accustomed to?
Yeah, the dynamics came down to, I'll call it the T model. The T model is basically a chart, if you will, of all the functional areas in the organization. So the CFO, all of the financial responsibilities they have, the COO, all the operational responsibilities. But at the end of the day, every business case, every situation that the organization faces is at, I'll call it the cross collaboration level, meaning that all of the functional areas have to come up to this overarching organization-wide cross collaboration. And so for that to work, even though I may have personal goals that I want to achieve in the financial side, there are business issues that built the strategy that the organization is adhering to right now. And we all come together to ensure that that strategy is being carried out.
That's another good question here, which I'll go to. What's the biggest thing that's changed about exec buyers' expectations in the last 5 years? I know you've covered some of it, but in the recent term, the last 5 years, what have you seen that's been most dramatic?
What I've seen is a lot of sellers recognizing the fact that C-level executives could care less about product and service. As a C-level executive, I am not in a position where I want to buy something from you. I want to learn something from you. That's critical for me. And what I'm finding is sellers, at least the ones that are truly differentiators, have grasped onto that fact. And if you look at what their campaign work is, if you look at their research work, they put in the time and effort to truly understand me as a personal entity within that organization, the organization itself, the markets, my industry, and what's happening on the outside. Because quite honestly, when I spend time with an individual or a seller, I'm expecting to hear something my own organization is not telling me. Because if I already know it, why would I waste my time talking to you? So in essence, the sellers now become smart in understanding that product and service is a commodity. Everyone is coming into my office asking me the same question, providing the same type of solutions, and there's no, I'm going to say that there's really no learning for me. There's no interest in me to want to listen to them because I'm not hearing anything different than what I already know. And I have this notion that if you see where the sellers are going today, the ones that are truly making a difference are the ones that have gotten themselves out of the commodity box. Now, let me explain to you what I mean by the commodity box. If you think about a graph that has two axes, right? The vertical axis is needs, the horizontal axis is solutions. The intersection of known needs and known solutions is what I call the commodity box. So every seller, every vendor comes into my office, talks about product and service, gives me asks me the same questions, and it doesn't generate any interest for me. The ones that are talking to me about undiscovered needs and undiscovered capabilities, okay, those are the ones where there is excitement, there is urgency, because they're talking to me about something that's going to impact my firm based on my markets, based on the future of where my firm wants to go, given the strategic goals, that I really want to engage a conversation with them.
So if I think back to one of our most successful research studies, that we published under What Sales Winners Do Differently, and we look at the attributes that separated those who won versus those who came in, second. Top three attributes, which I'm hearing come through from you just then: educated me with new ideas and perspectives, collaborated with me, persuaded you that you would achieve results. A lot of that had to do with bring me things I don't know or can't find within my organization that is going to educate me and is going to have some sort of impact to that I need to avoid or impact to enable the growth of my business. I'm hearing there as well. If you're gonna approach you, if you're gonna get a meeting and then you're gonna get value from that, doing your homework beforehand is critically important. Do not show up unprepared. Do not show up to talk about products and services. As you said, needs and solutions meeting the commodity box. Do your research on me, on you. Do your research on your organization, your industry, and your market, and show up with a point of view that's going to bring value or land some sort of value. Now, if someone has done that, but they haven't maybe they're in the ballpark of hitting your needs, but they're not sort of right in the center of it. Is that still okay? Did you value that at least you can see lots of prep work and you sort of in the space, or do they have to land it? Do they have to sort of do their research so well that you have to land the specific point or you're sort of switched off?
If I see that they put the time and effort into it, I mean that it's. I always had a saying on Wall Street: "Why should I care what you have to say until I know that you care?" So if I see that the campaign work was done, that the research was done, I will continue the conversation because I want to give the individual, the seller, an opportunity to try and convince. Listen, I mentioned earlier about risk and change. Okay, I'm looking for that seller to create what I'll call a buying vision. Getting me to feel comfortable with making that change. It's very easy for me not to make a change, quite honestly. And I'll confess here, since this is Boardroom Confessions, I would go into a shareholder meeting or quarterly meeting with making no changes whatsoever because it's a safe play for me. At the end of the day, it's very easy for me to talk about bad numbers and blame it on the external environment, the unknown. But when I make a change, I initiate that within the organization. I put my rubber stamp on it. I put my name on it. So now, if something is wrong or if the financials aren't reporting the proper trend, well, guess what? That's based on something I did. Yes, I'm making decisions that are probably multiples of my salary. So the expectations at the shareholder level, at the CEO and the board level are that, listen, I'm doing the right thing. I really put in, and I'm trusting the people that I'm engaging with, that the outcomes to be expected are going to benefit the organization. So, yeah, they could not land perfectly on the sweet spot that I'm looking for, but I want to give them a chance to see if that develops. So, will I give them more time? I might have just one meeting with them and never call them back. But if I
What
start to
what are
see
you
it develop,
what are you looking for from a seller or an organization, like a maybe it might be a team of a seller has them and a team of subject matter experts that they engage you with. What are you looking for that gave you that confidence to initiate that change to get your rubber stamp? Like what were the like elements? I know, like feel free to like pick a large purchase decision, or you can talk generally to that. What were the ingredients that needed to be present most commonly to get you to go, I'm going to step out of our comfort zone and I'm going to adopt this change and I'm going to drive it through and it has my rubber stamp and it is going to be the direction that we go in, particularly when it came to, something that you were purchasing and then working with a partner or a supplier or vendor or to implement that in your organization.
I think the best way to answer that is to give you an example, Andy.
Yeah.
So I'm going to take everyone back to 2007. This is when the New York Stock Exchange was still an auction market. Basically, what that means is all the men or women in funny colored jackets running around the floor making hand signals all day long. Well, I had a vendor, was a small time vendor. I mean, it wasn't a major cost factor for me. I think I paid them maybe $800,000 a year. And basically, all this vendor did was create a program that allowed me to take my large block trades on the floor of the exchange and break them up so I would not create havoc with the market. I wouldn't move the quote on the market and I could get better quality execution. So everything up until that point was about getting good quality execution for your customers, particularly my customers who were other banks, big institutional investors. This vendor had spent 6 months in Europe and found that all of the European exchanges were going electronic. The vendor came back and tried his best to get a meeting with me, and I just couldn't fit him onto my calendar. I kept pushing him off because I saw him as as a small vendor that handled specific problems within the organization. Nothing transformational, nothing unique. Well, but he was so persistent. One day I gave him an opportunity. I gave him 15 minutes on my calendar. And I'll never forget, his name is Walter Fitzgerald. He came in, basically sat down, had a conversation with me, told me what was going on in Europe. Basically said, Al, the US exchanges have to change. They have to go electronic because if they don't, all the liquidity is going to be drained off to Europe. It made sense to me. Because what I realized was a lot of our trades that we did here in the US, we could trade on foreign exchanges with foreign securities via ADRs and vice versa. ADRs are American Depository Receipts. So I could buy a foreign stock here on the US and European could buy US stocks and so forth and so on. Okay. A lot of people didn't think that that was a backdoor of how liquidity could leave a particular exchange. I listened to it. I did my research. This vendor told me something I wasn't aware of. A lot of people, my counterparts, I had a conversation with Lloyd Blankfein. I don't know if everybody knows who he is, the former CEO of Goldman Sachs. I had a conversation with Richard Fuld, the former CEO of Lehman Brothers, both good friends of mine. None of us were aware of this. I decided to take a chance. I was just about to spend upwards of $100 million on changing my floor brokerage systems to get better quality execution. This vendor convinced me to allocate that capital, not in terms of the quality of execution, but the speed. Because when you go to an electronic exchange, the speed is going to be the resonating factor. Well, that's where I put the capital. I had the largest pipes going into the New York Stock Exchange server. I had the best communication links. Lo and behold, at the end of 2008, the New York Stock Exchange decided to go electronic. When they flipped that switch, I wound up with 40% of the floor business on the New York Stock Exchange. Within 2 years, I added over $250 million to my bottom line. So to answer your question, it became an issue of something that I didn't know for my own organization, something from the outside, someone who had done all the research, all the work, was persistent, drove the messaging home to me, convinced me that, listen, it becomes a question of status quo versus change. If you can convince me to get out of status quo and make the change, then you're the winner. When I retired, that particular vendor, we were probably paying him close to $80 or $90 million a year.
Wow. And what when he was the smaller vendor, 2007, what was your spend with him then?
Less than $1 million. I think it was about 800,000.
Wow. So there was a shift in perception in terms of that. They changed your perception of them. I did actually hear, was it Walter? He was quite persistent. Yeah.
Yes.
I think persistence came through quite strong in that. Obviously, very clearly, he educated with you. He educated you very early on in terms of new ideas, perspectives, things that need to change in terms of future needs that you are going to need to have, and where the future's going, and where you need to align to, and the speed at which you needed to do it, which compelled you to think differently, act differently, and obviously benefit your organization and bring more value to the market. I do want to. There's a question here I want to pivot to, coming back to what we said, and it's, how do you determine what the C-level executives you are about to meet with already know, so you can then lead with something new and noteworthy? I pivot to that one. It's sort of building on where we're at the moment. It is one of the most asked questions I get from sellers around the world, no matter where I get, when they're trying to break in and elevate their conversation into C-suite stakeholders, either in existing accounts or when they're seeking to break into new. How would we know what you are thinking at any one point and what might be important to you, so that we can then form a view to engage you with to bring insight?
Yes, Andy, there's no silver bullet here. It's hard work.
We are looking for one.
Yeah, it's hard work. It's research. This is why when you look at the 6 Cs, we talk about the campaign element. That's the first component. That is so important, because it becomes a question. So where it starts is with the campaign work, looking at, if it's a public company, looking at their SEC filings, looking at their regulatory reporting, looking at their the C-level or the audit control committee's response on internal controls, because what that's going to tell you is everything that's known within the organization, right? So that's your starting point. Now, when you start to look at the industry and you look at things external to the organization, within their management reporting to the regulator or within their reporting to shareholders, are they mentioning these things that are external that potentially could harm the organization or change their markets or change their ability to be more profitable and increase profits? If not, then that to me is a starting point. That tells you that they may not be focused on that change. Just like in the example I gave, if you would have looked at my internal reporting or my SEC filings, there was no mention there about markets going electronic and maybe changing my regulatory requirements. None of that was identified at that point. So that's a starting point, but it gets back to hard work, research. You know, it always, for me, it's always about cash flow. Unfortunately, you know, if you don't have good cash flow in the organization, I could show you hundreds of organizations that show profitability, but they have poor cash flow. Guess what? They're not successful. They can't self-fund themselves over a 4 to 5 year period for a large transformational change. So I'll call myself cash king. Cash is very important to the organization. And one of the things that I developed was what I call the money wheel. And I always find it interesting to me that when I meet a seller, many of them, when I ask them, have you looked at my financial statements? They say, oh, no, we're not accountants. Oh, no, you know, we don't understand how that works. Well, finance is the language of business. Every decision that I'm going to make, whether it's buying a pencil for 5 cents or buying a new piece of hardware for $100 million, it's going to flow through my financial statements. So you have to understand the impact of what you're telling that C-level executive, the impact to their financial statements. So I developed this thing called the money wheel, which basically talks about cash flow and how the various financial statements interact to generate or take away cash flow. And it's one of the things we call financial acumen that we discuss as part of the 6 C's. But that's incredibly important because if you're at the C level, every single C-level executive, whether it's marketing, operations, finance, their decisions at the end of the day, they're thinking, what is that going to do to the income statement? What is that going to do to my balance sheet? So the sellers need to understand that.
How often did you engage with sellers who had the necessary business and financial acumen to be able to have those sorts of conversations and make those connections either before or in the moment or even after they engage with you?
70-30. 70% did not have the knowledge base, 30% did.
Wow. I love that. I mean, it is so true. Finance is the language of business. You're in the C-suite. You are going to need to know what you are talking about and align that, particularly in the case you were talking around to financial impact. And, you know, we talk about making the impact case, the impact ROI case. So thinking about your financial impact and financial impact modeling in preparation for and expecting it to come up during those conversations, critically important and a skill gap area for some that you want to talk to the C-suite, yet you aren't yet equipped with the skills to or have the business financial acumen to be able to, you know, hold that conversation before you get to being able to build an impact ROI case. In this case, as you said, financially fascinating. That's a great one. I just want to come
Andy,
back.
I'm sorry, Andy, if I could just mention one thing.
Sure.
What it also does is helps you formulate intelligent questions that are going to be at the C-level interest. For example, I can't tell you how many times I had sellers come into me and say, well, what keeps you up at night? As soon as I hear that, I show them the door. So think about the 70-30% we just spoke about. The 70% is asking me that question. The 30% are asking me questions such as, so Al, I look at your balance sheet and I notice that you're heavily engaged with derivatives on the asset side. Now, to me, that, you know, unless I'm completely off base here, that's locking up money, investing in these derivatives. Is it for purposes of risk? Or is it for internal investment purposes for, you know, your own self-interest, you know, in terms of house money? Because if it's for external risk, we potentially could provide you with a solution that could help you unlock value in the balance sheet, meaning you could not have to hold that asset where you could utilize that cash for other purposes. Now, if I have 2 vendors come in One asked me if what keeps you up at night, and one asked me that question I just went through. Who do you think I'm going to have a conversation
What, and that is one of the questions that's here from one of our listeners. What like is it that you have to land with such great questions like that in order to enable discovery when they get to meet you? Because they may have come with a well-prepared point of view, insights that may support that education and bring you some thinking that your organization hasn't, as you said before. But like how open were you to discovery when you gave sellers time versus, hey, like turn up and deliver some value instantly? Like, how much did you want them presenting and telling versus being open to that balance of, okay, they've got to show interest in you by asking questions.
well, it comes down to starting the conversation with storytelling capability. And we might go into this. I think you have some other questions for me, but I think it's important for sellers be good storytellers. And the reason I say that is because if you're just going to simply ask me questions and you expect me to give you answers, quite honestly, if you haven't built up enough trust with me, why would I divulge corporate secrets
Mhm.
to you? Why would I tell you my utmost issues and problems and, things that are concerns the organization? You have to have that element of trust for me to basically say it's worth it for me to spend my time telling this individual about what's going on so that
Mm.
possibly they could help me. But B, if they have the ability to tell a story up front, just like Walter did with me, then it sparks my interest. Because quite honestly, if you could tell a great story, what does it do? It provokes ideas and it
Mm.
justifies change. And you need both of those elements for me to continue a conversation with you.
Fascinating. Brilliant. Okay. We talk a lot about storytelling. We talk about preparing mini stories and then injecting those to not dominate the conversation, but pique that interest
Mhm.
throughout that. So I find that heavily resonates in terms of what both our research and lived experience says in the field, and also at a broader point, developing convincing stories. So a lot of this sits in the insight selling sort of side of things. Um, what they get a meeting with you, they're engaged in conversation with you, you're getting value, progressing forward, and as an opportunity for them to do business with you evolves. What makes a business case really convincing and compelling to you as a C-suite decision maker and your C-suite buying team?
The most compelling thing for me, Andy, is what I brought up earlier, is the ability for that seller to create a buying vision for me. In other words, they're out of the commodity box. They're talking about things that the organization hasn't informed me of. And so I now can envision the impact to the organization. One of the things that in my mind, when I'm talking to a seller, I start to create what I like to call a value inventory. And here's what I mean by that. It's kind of interesting because I always do this and it never failed me in terms of making sure I understand where the value is coming from. So value inventory, I start with the question, why would I buy anything from you? Then I say to myself, well, what's the business issue that we're discussing? Now, obviously, if it's something that I'm not hearing within my own organization, this is great. I want to hear more. Okay, so what's the business issue? What's the desired outcome? What am I looking to achieve with this? Who's the stakeholder? Is it going to impact me only in finance? Is it going to impact the entire firm? What is the scaling size of this? What is the value hypothesis, or what is the solution that this seller is coming up with or proposing? What's the value metric? How could I measure this? How is it going to impact me financially? What's the value proposition? What are they looking for me to do? And how will that impact me and my colleagues? So as the seller is going through their storyline or their discussion, this value inventory is being created in my mind, because if it hits on all the points I'm looking for, then I could see true value going forward. Don't forget, if I'm doing a project that carries out 4 or 5 years from now, I have to have some sense of whatever I'm investing today, what is the outcome going to be a year from now, 2 years from now? Will it increase my cash flow? Will it show higher profits? Will it meet the goals that we have in terms of cost reductions? I need some sort of inventory matrix that's going to help me understand better what the outcome could be if I engage with this seller.
So we talk about in Rain terms, we talk about the value, the three legs of the value stool. We talk about resonate with you and give you reason why you should act now, right? So in terms of your need set, and I think that helps align to the buying vision. We talk about substantiation, building trust with the buyers, substantiating your company, your offering, and that it's going to get results, which aligns with exactly what you were talking about there. It's not about, I'm not buying a solution from you, I'm buying an outcome, right? And those outcomes are, in that case is this going to align in that instance to cash flow, profits, cost reduction measures and outcomes that you were looking to drive. The other leg is differentiate. Like if you come back to what you were saying in terms of commoditization, products and services, very much the same. Am I right in hearing from everything that you've shared so far? It was the approach and the way in which the sellers engaged you that ultimately differentiated them from other sellers who may have the same product and service offering.
It's that, and the other ingredients is having a level of confidence, having a level of business savvy that I could see that they understand my markets, my industry, and really empathy. And let me tell you why empathy, because it's important. If you remember when we started the conversation earlier, I talked about how each CxO has their own functional responsibility, and then we go to the cross collaboration. Well, you need to understand the individual CxO you're talking to really on a personal level, okay? And it's important to understand that because, yes, although we have an ultimate strategy, an ultimate goal at the organizational level, particularly for a large transformational change, I may, let's say if I'm in a CFO role, have a personal goal to say, well, from a regulatory perspective, I want to have the best risk management system on the street. I want to be able to get out in front of all the issues that could be coming down the line in terms of AI and data intelligence and data protection, whatever it might be. The point is having the empathy so that you understand who this person is as an individual. The biggest mistake I see being made or has been made with a lot of sellers is they turn a person into a thing. And what I mean by that is if you're talking to the CFO or the CMO or COO, you lose sight that they are individuals, and you're focused only on Jefferies or Morgan Stanley or Goldman Sachs. And so you lose that ability to truly understand who this person is because you really want that person to be your advocate. And for every CxO that your sellers are going to meet, at the end of the day, there's 5 key elements that any good C-level executive needs to be top of mind for them. Cash, profits, assets, growth, and people. If you find a C-level executive that doesn't have those 5 elements in mind with everything they do on a daily basis, my opinion, they're not a good CxO. And you could see how it falls apart. Here's a perfect example. Let's look at people. What I mean by people is internal employees and external customers. That should be a focus of the C level. If you're not focused on your people, let's say your workers, your employees, the problem you have, and if you don't have empathy in the sense of making sure that that asset is being taken care of, this is how a firm winds up in trouble. Here's the example. The financial crisis that occurred in 2008. One of the biggest problems you had is you had firms out there who were so selfish in trying to bridge the gap between profitability and taking advantage of the markets and not caring enough about their people. So the examples I'm going to give you, again, ones I brought up earlier, because I had this conversation with Dick Fold and with Lloyd Blankfein of Goldman Sachs. The conversation was at the time, we have to be careful in terms of what the regulators are telling us we need to do because we have to watch out for our people. We have to take the balance sheet, make it less risky because we have to protect the organization and not worry about the profits at this level. We have to forego profits possibly. Well, Lloyd and I agreed to that. Richard, on the other hand, could care less. He was all about profits, all about generating money, all about bundling these assets with all the risk that they incurred, and keeping them on their books because it was such a high rate of return. Whereas what we did was sell them off and get them off the balance sheet because they were too risky. Well, let's fast forward. Where's Lehman Brothers today? They're out of business. Where's Goldman Sachs today? They're $1,000 per share stock. So if you're not focused on those 5 elements, you could seriously run into trouble.
Profits, assets, growth, and people.
Yep.
Fascinating. Now, you mentioned something there before. If you're going to get support, don't turn a person into a thing. Understand the different C-suite buyers as individuals that are making a collective decision on behalf of the firm, but they're individuals and each of them have needs, and certainly you've got to connect with them at a personal level. Now, if I was wanting to make you a champion, right, as the CEO, if I, as the seller or the selling team, wanted to make you a champion of our cause because it aligns with your buying vision, are there any other elements? If we focus on the 5, we engage you with confidence and empathy, engage you on a personal level, and see you as an individual representing your organization and seeking to bring value to it. Is there anything else that a seller could do to develop champion, you being a champion of their cause in there that you haven't already mentioned? Anything else that it takes to earn your support on that, to really drive things forward on the buying committee on behalf of, what the initiative is that you might be looking to purchase and drive through the organization?
I think you have to be aware of the fact that you're not going to change a CxO's mind by analyzing history. Okay. The biggest problem is that you can't be looking backwards. You have to look at where the future is, what's going on around that organization. Again, that's what's going to spark ideas, insights. Great questions are not good enough. You have to have great insights. You're not going to have great insights unless you really focus on what's going on in the external world and how it could impact that particular firm and that CxO. When I look at the banking industry today and I hear transformational change, digitalization, and all of this great stuff, and then I look underneath the covers and see what some of them are doing. All they're doing is taking a traditional bank and overlaying technology on top of it. They're not changing the structure of what financial services is. I look at it differently. I say, okay, 5 years from now, what does financial services mean? What will it be? It may not be a bank at all. It may be somehow integrated into some other application that people use or businesses use on a day-to-day basis to function. And so this gets back to this concept of first principle thinking. And probably the best example of that would be, and I'll quote Elon Musk, when he looked at his space program. And he basically looked at what NASA was doing and said, that doesn't make any sense. Right now, if they send 100 pounds of material up into space, it costs the government $200,000. I'm going to look at it from a commercial point of view. Let's say tomorrow we have to move things to the International Space Station or whatever. I want to develop space travel and space programs so that if I move 100 pounds of material up, it only costs $3,000. So first principle thinking, he redefined what space travel really means, made it more efficient, made it less costly. That's what C-level executives, at least me, what I would be looking for in terms of what a seller brings in terms of insights. Are they looking at the future of my particular industry, my organization, and what I'm trying to accomplish? If let's say if seller came to me and said, you know what, Al, you're running the bank. Tomorrow, banking is not going to be a place you go, but something you do. I would say, wow, okay. That's a unique insight. Tell me more. What do you mean by that?
Brilliant. I've got a couple here I've just got to finish off with. We've got about another 5 minutes, so I'm just gonna throw a couple at you quickly. This is an interesting one in terms of what we've covered, because we're talking about engaging you, getting what is worthy of your attention to be able to have a conversation, what continues engaging you in a conversation, what it takes to get your support to advance something through to you making a decision likely in their favor, and setting you up as championing or deepening your support for that purchase decision. When sellers turn up, right, they've earned the right, they've delivered enough value, they get the opportunity to stand in front of you and your executive team, and they get to pitch, right? They get to share their solution in much more detail and engage the buying group. Give us some insight in terms of what did you see work really well at solution presentation versus where did you see it bomb? What were the things where it just, they did really well up to that point, and then bang, that like it was over for them.
Let's start not by using the word pitch, because what happens when you use the word pitch, and this is exactly what happened. They start talking about product and service, their solutions, and so that bombs. As I mentioned,
by the way, I use that term because it's regularly, universally used with me in the seller landscape. So interesting insight from you there. Good, keep going.
Let's talk about storytelling. Let's talk about being concise with a storyline, looking at what interests me based on. So listen, discovery for too many sellers is a comfort zone. What happens there is it becomes a strict interrogation. In other words, I'm not getting anything out of it. I'm just feeding information back to the seller based on some questions that they have. So understanding, being insightful. Listen, think about how much data C-level executives have to interact with on any given day. It becomes a question of, can a seller make sense of that data to me? Can they help me filter out the noise and focus on only what's important to me and to move the organization forward? So the ones that come in with that type of mindset and talk to me in those terms and basically say, listen, here's the approach we have. You talk about the inventory value that I mentioned earlier, right? Having that, just having sellers do that, you now have a skeleton, if you will, of formulating a great story to go forward. So this is how you create the buying awareness that we started our meeting with here today. Once you've done that, you know, here's how you know you've won. When I leave the meeting with you and you've got me to start to change about how I think about my business issues and or do something completely different, you're a winner. That's what your goal should be.
Does that sit in your buying vision? Does that mean they've landed in your buying vision and now you are saying, this is where we're going. I'm behind this because of this. And let me introduce you to these people who are going to share more on that.
Because again, the buying vision, they've now convinced me that the status quo is not good for me. Even though it's very comfortable for me to go into a shareholder meeting or a quarterly report and basically say, well, nothing's really changed, but no harm, no foul. That shareholders at some point 2 years down the road are going to say, taking my money elsewhere. This firm is not going anywhere. So they've convinced me that the status quo, if I stay with it competitively, is not good enough. I have to be able to make a change, and they've convinced me to make that change.
Al, I could talk to you for hours. I got so much value out of that. I wish I could have got to every single question. Such great questions there, and hopefully we'll figure out a mechanism to be able to answer some of those. In our world, I'm sitting here listening to everything. There's a range of different elements of range selling, doing your research, preparing at an individual, organizational, industry level to best engage you. Constantly it rung through. Come with a point of view, not just a bunch of questions to ask me, because as you said, you get no value from that in the discovery piece. Align with and help understand my buying vision as it forms. Don't just have a conversation with me. Come armed with some really good stories that are going to make me think differently, that are going to help shift and change my perspective over time. Be confident, but lead with empathy and understanding, and engage me as a human and my buying team as a human, and you are going to connect with me incredibly well. So there's emotional need, there's rational need. Love your top five. I think I'm gonna certainly leverage that today with a bunch of executives who I'm going to meet with. Cash, profits, assets, growth, people. I thought that was brilliantly summarized. I also don't want to miss the simple stuff, and simple doesn't mean easy, right? Where you talked about the characteristics of how people were able to engage you, persistence. And I think we don't hear that a lot these days. I certainly don't hear it as I'm traveling around the world with people say, oh, that's, old school, get in there. Well, it's not old school at all. It's core behavior that should exist. You're not just going to land once. You've got to keep at it, and you've got to keep thinking and doing your research to land the value, to earn the right to engage the C-suite. I love the commodity box. There's so much here. I've learned. I've been a study of that as we've gone. I would love to, as I said, continue our conversation, and I hope we get to do that. For everyone who has joined us live, thank you very much. For everyone who is watching the recording, thank you, and I hope you've got value from this. We're going to keep this series going. We might, hopefully, at some point be able to bring Al back for round two, and it's like, let's go deeper and wider, Al, because there is so much more in that brain of yours from the experience. And I love how direct, I love how real, I love how value adding you are. So thank you so much. Al is one of the very special C-suite executives who have lived and run organizations and made decisions and engaged sellers who feature in the C-Suite Sales Accelerator from Rain Group. It is simulation, and you actually get to engage and practice your executive selling with real executives like Al. So it helps any customer-facing team strengthen their ability to communicate business value, engage senior decision makers, exactly like in realistic buying environments. So participants engage directly, and you are engaged in high-pressure, unscripted business conversations designed to mirror the complexity of those real enterprise buying dynamics that a lot of you engage in each and every day. So the experience is aimed to accelerate executive selling readiness through realistic application, executive interaction, and strategic business pressure. And imagine being able to engage with Al in as close to real life, unscripted conversation, and then be able to get feedback in the moment, and be able to develop in a safe environment, yet a realistic environment. And that's what I love about this concept, and very excited to see more of it out in the market to help sellers really engage the C-suite better. So Al, thank you very much. Thank you very much to the rest of the team, and we will see you very shortly. Hope you enjoyed. Thank you.